Hey gang, welcome to Origination Nation. I'm your host, Chris DeMatteis, here with my main man, Steve Carpatella, and we are so pumped to have you with us today. Origination Nation is all about two things, relationships and collaboration, because that's what drives real results and success. In every episode, we sit down with leaders from across the industry who are doing things differently, bringing bold ideas to life and making a real impact. All progress originates with great ideas, and this show is about sharing what's working so others can learn, grow, and build something that lasts. So if you're all about connection, collaboration, and helping others level up, you're already a part of Origination Nation. So let's jump right in and see what we can originate together. Welcome everybody to another episode of Origination Nation. I'm your host, Chris DeMatteis, and today I'm very excited to have with us one of our own longtime loan originators, Lori Distelcamp. Lori, welcome to the show.
Thank you, Chris.
Yeah, it's great to have you here. I've been looking forward to having this conversation with you. So just to give a little background, Lori is a native New Jerseyan, born and raised, 20 years experience in the mortgage industry, 10 years with us and our group at Informed Mortgage and previously EPM. She's also a licensed continuing education instructor through the New Jersey Real Estate Commission. And has just a ton of experience in the mortgage industry. Again, 2 decades behind her now. So, yeah, Lori, really looking forward to getting into some details with you today about the mortgage industry and your experiences. I know you have a lot to share, again, with 2 decades of experience behind you. I think our listeners are going to take a lot away from the conversation. So, again, welcome to the show.
Thank you.
Yeah. So let's just jump right into it. So again, most people in the mortgage business that I find don't actually ever plan, on the outset to join the mortgage industry. So tell us a little bit about how you ended up here. How did you get involved in the business? Was this an initial plan? Was this all as a dream of yours from the time you were a little kid? Or, did life take a few turns and you end up here? Tell us how you got here.
I mean, absolutely not a dream or even a thought in my mind. But my first job out of college was involved some sales. I was working for a Japanese import-export company, got some experience there, but I was commuting into Manhattan. And after I had my kids, I didn't want to do that commute anymore. And, in the background, my uncle, Ed, who has been in the mortgage industry for many, many years, he kept telling me, I think you'd be good at this. I think you'd be good at this. So I finally said, let me give it a try. I won't have to commute anymore. And I fell in love with it right from the beginning. So I started at Wells Fargo Home Mortgage as my uncle's junior, and it really took off. It was really great.
So you have some family roots in the business with your uncle
Yes.
at Wells. Yeah.
I also have a cousin in the business, so it runs in the family.
Yes. I know your cousin. Yeah. So you guys have, some family history and some blood in the mortgage business for sure.
Mm-hmm.
And how was it working with family? Did you find that challenging, or was it, useful and helpful? What was the experience like when you started at Wells?
Yeah, quite honestly, it wasn't at all challenging. My uncle was just really there to impart his wisdom on me, and I soaked it all up,
And how long was he in the business, Lori, before you started?
Oh, he was probably in the business 20 years when I started, and he just recently retired. Yes. So.
Yeah, so it's great to have some seasoned vet behind you like that with the experience, especially when you're starting out. I think that's a challenge for a lot of people too. Again, you didn't start out in the mortgage business; you ended up here, and I can definitely sympathize with the commuting that you did. Driving through North Jersey is definitely a bear, and working. In this business definitely gives you a lot more flexibility and freedom. But it's funny, I never thought I would be in this space either. A couple twists and turns landed me here, for which I'm very, very grateful. But it brings up a good topic. I'm going to be 49 this year. I think a lot of originators in the business are getting older. And we don't really see a tremendous amount of new originators entering the business. Right. So, I mean, for anybody who is possibly thinking about a new career or a new direction, what would you say to them about the mortgage industry? What based on your experiences and starting out 20 years ago, do you feel that this is a good place for someone to cut their teeth and form a new career?
Do. I mean, I love it. I love, just as you had mentioned, the flexibility, you can work from home, it's not a 9 to 5 type of job, but it also is the type of job where you really have to be ready and willing to work, on weekends, at night, it's not the type of job that you could necessarily slack off and be successful. But that being said, if you're willing to put the work in, it's a lot of fun. It's every day it's something new. You're always learning and growing. And just I really love being able to be a part of someone's, you know, purchasing a home is it's just a really nice thing. And to save people money, I feel like I am making a difference with what I do.
Yeah. So, three things I heard you say there. One, the flexibility that the job and the industry provide, it does do that. But at the same time, it is absolutely not a 9 to 5 job. So, for anyone looking to punch a clock and work a strict regimen of set hours every day, being a loan originator is not
No.
that at all. So you do need to be extremely flexible. And to your point, you can work as hard as you want in this business, right? I think the most successful originators, like us, that got to this point in our career, did it through hard work, and effort and putting the time in. But it is very rewarding, right? And like you said, every day is something different. It's very dynamic. You're dealing with multiple personalities, different people. Every transaction, whether it's a purchase or a refinance, is unique in a lot of ways. Which for me, that keeps it fresh. The new challenges every day. I literally, also 20 years into this industry, there's not a week that goes by where I don't learn something new, right?
Exactly. As much as
And
we know, and as much as we're experts in the mortgage industry and the mortgage space, I learn something new almost every day. And it is a lot of fun, and it does, you know, keep you in a sense young, because
yeah.
you're always learning something.
Yeah, and
But
it's, we're always learning something from the experiences, but also the industry itself, the guidelines
mhm,
constantly change, the market constantly changes, right? So,
sure.
again, it never gets stale, that's for sure. And, again, helping people, right? The satisfaction that we get from helping someone buy a home, whether it's their first home or they've had they started a family, have kids and need to upsize, or they're retiring and downsizing, or refinancing to consolidate debt, or put kids through college, or travel. There's always that personal connection, and yeah, I really do feel like we help people, which is
Exactly.
another huge part of why I personally love this business. And I know you get a lot of satisfaction out of helping people as well, right?
Yes, absolutely. And I think probably the biggest challenge if somebody wanted to break into this space, and I think the biggest challenge would be not having a book of business or a client base. You're starting from scratch, and that's difficult. It's not easy. And I think you really need a mentor, um, to help guide you through, um, learning how to run a deal and, all the aspects of being a mortgage loan originator. So I definitely think it is a difficult industry to break into.
Absolutely. Yeah, I feel it's similar with any sales role,
Mhm.
whether it's financial planning, real estate, right? I feel people enter the market, seeing the success of people who have been in the business for some time, thinking, "Oh, I would love to do that." They have a great career, they have great flexibility, they make great money, but it's not easy in the beginning by any means. It takes diligence, perseverance. To your point, having a mentor, having someone show you the way is important. And I think a lot of people get burnout very quickly unfortunately. You have a lot of people that enter the business but don't make it.
Hmm.
So it does take that special personality, that persistent person, that hungry person, that is willing to just, work diligently and, again, not be afraid to hear the word no, because again, in the beginning of this business and any job like this, you get a lot more no's than yeses. But if you can persevere through it, and if you do have the support behind you, it's a great career and a great industry to be a part of. You just have to grin and bear it through the beginning. And I think that is also why maybe we don't see so many young people entering the business. Um, and places like Wells Fargo, right? The bigger banks, they do have internal training programs. They can be very, very good outfits to learn the business and get some training, right? You started in Wells Fargo. Obviously, you had the mentor of your uncle, but talk about that for a second. Did they have an internal training program? Did you take advantage of that? Is that something that you think people today could tap into if they wanted to get into the business?
Yeah, they did have a training program, but I think more important is having the mentor because you can read, training, you could take training courses, but until you're actually out there, you know, trying to solicit business, running a deal, you really need a mentor, I believe, to be successful. But yes, they do have some training available.
I think it could be a good place for someone new to start, right?
Agreed.
Like,
Yeah.
for example, like just take our company, Informed Mortgage, right? The originators here are all extremely experienced veterans. We do train from within, right? But we won't hire a brand new originator with zero experience and train them from the ground up, right? Our approach is to introduce them to the business, and there are multiple perspectives and angles in this business, right? From starting out as a client service specialist, right? Or a loan officer
Right.
assistant, just engaging with the customers and supporting a loan officer can be one of the best ways to get your feet wet in the business and start to learn. But there's also the processing side of the business, right? The paperwork
Hmm.
side. There's the underwriting, the guideline side as well. So I think, our approach to building a loan officer is starting in the very beginning and just moving someone through the different segments of the business. So, I've been asked many times if we would hire somebody with no experience. Absolutely, we'd hire somebody, but you're not going to come in and immediately be a loan officer, right? It's
Yeah.
almost like you need to go through an educational process, right?
Well, and one
Mortgage
other
college, if you will, to
reason,
get to that point.
yeah, another reason that it might be easier to start at a Wells Fargo, for example, is they're a little more they're a lot more limited in the number of products they have. Um, so, to be thrown into a situation where you pretty much have every type of program and product and solution at your fingertips is very overwhelming. Whereas if you're starting at a big bank where their programs and products are more limited, it's easier to get a grasp and get a hold on it, learn, crawl before you walk, before you fly. Um, so in that sense, also, I think, it would be easier to start out at a place like Wells Fargo than it would be to be a broker um, with unlimited access to programs.
Yeah, that's a great point. And touch on that for us, Lori, right? Like, so you started at Wells Fargo, one of the
Hmm.
largest banks in the world.
Yep.
10 years in, you decided to switch gears and leave Wells Fargo and move to EPM, which was a mortgage banking firm, right? So, and now fast forward a few years beyond that, we're now Informed Mortgage, again, a mortgage banker and a broker, the best of both worlds.
Right.
But yeah, to just touch on that for the listeners and for anybody who may be considering getting into the business, like what is the difference between, working for a big bank and working for an independent mortgage banker?
Yeah. So, I mean, as a loan officer, working at Wells Fargo was great up to a point, and then in a sense, I outgrew it. Um, I wanted to be able to help more clients and have more access to more programs, less overlays. So that was really my main reason for leaving Wells Fargo was, to be able to help more clients close more loans. I was very limited to just Wells Fargo's products.
So it was a limiting factor, right? You have
Correct.
access to more solutions for consumers when you leave the walls of the big bank, and it makes sense. Banks can be great. Again, most of these banks are depositories first, right? Like we all have our checking and
Precisely.
savings accounts
Mhm.
there. Our paychecks get deposited there, so that's their primary function. Mortgages are definitely a product that banks offer, but they're an ancillary product,
Mhm.
right? And, they are restricted to the programs and products that they want to offer. Whereas on the independent mortgage banking side, you have we're essentially specialists, right? We only do one thing in mortgage banking, and that's lending money on 1 to 4 unit residential properties. And there,
Exactly.
there's no checking accounts or savings accounts or insurance products. It's just mortgage. So, you do have access to more tools, can help more people. And, I think, a lot of people the consumers gravitate towards independent mortgage bankers as well once they learn about them.
Mhm.
Really too, because the level of service is higher. Right.
Correct.
Again, not a knock on any of the big banks, but again, they're massive. They have tens of thousands of customers walking through their doors, every week. Their retail locations, their online locations, they're providing a myriad of services. They're just incapable of providing that level of service that a specialist can. And, especially when it boils down to timing and execution, consumers find that not only are interest rates and fees lower in the banking space, which again is another probably reason why you came to this space, right? To be more competitive as well. But also the level of service you get to provide your customer, and the relationship that builds, right? So touch on that, as far as your business and how you've gotten to where you are and established this book of business, as you said, that you have. What's been the key driver of that book?
So, starting with referral sources. So, going back to when I started, my uncle was very big into getting out on the street, talking to realtors. Back in the day, you went to each realtor office, you called on the realtors. And he always told me, stay in front of them, stay in front of them. And you know, what that means has kind of changed over time, but there's a lot of ways you can stay in front of referral sources, such as networking events, volunteering, just picking up the phone and calling. Um, and that is something that I always do. It's changed from, hey, on a Tuesday, I'm going to go hit 6 offices and pass out flyers. So, no, there's not realtors sitting in these offices mostly. So now it's more networking events and phone calls, but you just have to stay in front of them. And the other thing that I do um, is I'm a source of information. So I will tell, realtors, for example, um, hey, if you ever have any mortgage questions, call me. It doesn't matter if I'm not on the deal. If you got a contract and you're not sure about a certain loan program, um, call me. So I'm giving them something of value. They're looking at me as an expert, and I'm there for them when they call me. So it's also a follow through.
Sure. Yeah, you're a wealth of information for
Yeah.
real estate agents, and consumers as well, and
Hmm.
accountants and attorneys, right? I think people fail to realize that this is such a specialized space in a way. The nuances of lending money and borrowing money are complex. Consumers aren't ever taught really how to borrow money. Right. It's not something that we go learn in high school or college. There aren't any courses for it. And a big part of what we do is inform and educate, right? And it's kind of why we named the current company Informed Mortgage. But you bring up some great points. Staying in front of people is really the key to any relationship based business model. I don't care what industry it is. Helping people is one thing, and then maintaining that relationship is important, and driving, more business and more referral business from those relationships is how we've gotten to where we are in our careers. And to your point, it's not the same as it once was, right? We're not out there necessarily pounding the pavement, dropping
Right.
off flyers and knocking on doors of brokerages, because really, especially post COVID, nobody's in those offices, right?
Correct.
Most people have moved to a virtual model. And that kind of ushers in, the era of AI, right? And how that's influenced our business. Touch on that for a minute. How do you stay in front of not only your real estate partners and your financial advisors and all the other referral partners that you work with, but even more importantly, the clients, right? 20 years in this business, you've probably closed thousands of mortgages, and it's impossible to pick up the phone and call them all and stay in touch with them. So what's worked for you, since you got in the business? Have you learned new tricks, to maintain these relationships, and how have you utilized technology, in particularly AI now, to achieve that? What's been your experience?
So, I mean, just talking about AI, this is obviously a very relevant topic, and I don't consider myself the most tech savvy person, but I am embracing AI. I don't believe it's going to replace me, um, or replace us as loan officers. Absolutely not, because people really want to be guided through the process. Y- it's one thing to look things up on the internet, but you really want a loan officer that's going to be there, inform and guide you through the process. So I do feel secure that AI won't replace me. However, I do think as a loan officer, if you're not using AI as a tool, you're probably going to fall behind. So what do I use it for? I use it every day. I use it for mainly for looking up guidelines. If a client asks me a question, I can really quickly look it up. Fact check myself. I want to make sure that I'm giving the most up to date information. As you know, guidelines change. I can look up deeds. Is the property in a flood zone? So many things that we can use AI for. Um, I think it's a really good tool and not something to be afraid of.
Yeah, it's definitely making its mark in not only our industry, but I think a lot of industries right
Mhm.
now. And I think it's still in its infancy, but it's been amazing to watch how rapidly it's advancing. I use it every single day. We use it for, like you said, looking up guidelines, combing through, thousands of pages of guidelines, which is also something I think most people don't realize, when you talk about, you know, being replaced by AI, getting that guidance, right? Getting that. Well, first of all, I think people always are going to want to interact with other people because that's our nature. We're human beings. So,
Absolutely. When you call customer service, you
yeah,
don't want to push a button. You
no,
want to talk to a customer service rep, right?
there's nothing more frustrating for me than dialing an office of any kind and having to go through endless prompts.
It's the
I
worst.
just want to, and I'm like, agent, agent,
Yeah.
agent, right? Like, just pick
Operator.
up the phone and talk to me, operator. Yeah, yeah.
Yeah.
Like, so that's extremely frustrating. And again, that's just because we are human beings. So I don't think we're going to be replaced. But to your point, it's a very, very powerful tool, that's just going to keep getting more and more intertwined with all industries. And yeah, it's great to leverage it, right? One of the ways we have had a lot of success with automation and AI is through even just emails, right? And monitoring our customers' interest rates. Someone buys a house, interest rates change, right? They most people end up refinancing on average every 3 years. For one reason or another. A lot of times it's because interest rates are lower, moving lower. So, we're now employing AI to monitor market conditions,
Mhm.
compare current customers' rates to the current market, and let them know automatically when we should have a conversation. Right. So it's not replacing that conversation. It's not replacing us and the value we provide, but it's alerting us to it and allowing us to monitor thousands and thousands of our customers' financial situations and provide that higher level of service.
That's a
right?
great point. Hmm.
Yeah, so like it's again just a great tool. So I'm excited to see how that continues to evolve over the coming years, and I'm also not scared of it. I welcome it, I embrace it. And I'm excited by the opportunities it'll present us. Um, you also mentioned the part of our role where we inform and educate, and again, using AI to look up those guidelines and the complex situations is great. But, you also are a continuing education
Hmm.
instructor in New Jersey. I know you're out there teaching as well as helping clients buy and sell or buy and and refinance homes. You're teaching real estate agents about our side of the fence or about the mortgage industry. So, touch on that and how that has impacted your business, your relationships, and yeah, tell us, about the CE side of the business.
So I do enjoy teaching the CE courses very much. I obviously love mortgages, and I really enjoy imparting the information and the experience that I have to realtors so that they can help guide their clients. So, and I always say to the realtors, you don't have to be an expert in mortgages. You just need to know the questions to ask. And, through the CE courses, they can get a better grasp of mortgage lending and the questions they should be asking and the guidance they should be giving their clients. So, um, I think it's very helpful again in showing that I'm an expert in mortgage lending and somebody that they can come to with questions. So it's helped my business. It's opened door to new relationships. And it helps the agents with their relationships with their clients. So it's definitely a win-win, and highly recommended if anyone wants to get involved with teaching CE courses. It is great.
Yeah, I think that's great. I mean, it's cross training. We're providing cross training opportunities for agents. Again, not to be experts, right? Not to replace us or know our business inside and out. It took 20 years for us to get where we are. So, but you can and should, as a real estate agent, know just enough to be dangerous, right? Like you do need to know how to answer certain questions about interest rates, about loan programs, about just mortgage 101 basics.
Yeah, and just
Um,
knowing what programs are out there,
yeah,
sometimes I'm explaining programs and an agent can that's the first time they've heard of it. And now they know, okay, all right, my client's self-employed. Wait a minute. There are programs for self-employed borrowers, bank statement programs, for example. So it does help them help the client, and that makes them look good as
yeah,
well.
yeah. Makes them look good. They're a resource for their client, a better resource.
Exactly.
Also helps them identify opportunities, right?
Mhm.
And so again, the more you know about title, real estate, mortgage, insurance, right? All of these avenues touch the real estate game, right? Appraisals, home
Mhm.
inspections. Again, don't need to be an expert in it, but you need to know enough. And the CE classes that you teach are just a great way that you give back.
Mhm.
Um, yeah, it's very rewarding. I love teaching as well. I feel like I teach every client I talk to. I'm always educating and informing somebody.
Mhm.
And I know you do the same.
Yep.
So, yeah, it's very powerful. And also for real estate agents, if you think about it, they rely on us on the mortgage side,
Mhm.
especially for pre-approval, right,
Mhm.
of their potential buyers. It amazes me how much time, effort, and energy a real estate agent will invest with a potential buyer, to establish the relationship, the rapport, and ultimately just provide that potential buyer with a very high level of service. So I fully respect that. But not every buyer is immediately approved. And, I feel like agents that invest a little bit of time in understanding, especially buyers that need financing, not necessarily
Mhm.
cash buyers, but the more you learn about financing as an agent, to your point, knowing the questions to ask is paramount, not just to provide good customer service, but to protect your time as a real estate agent.
Hmm.
right? So many agents get an interested buyer and immediately go to work, right? And they feel like they are being productive and doing what they're supposed to be doing. And they are, but that buyer may not be able to obtain the mortgage they need to actually close, right? So again, just knowing the right questions to ask is a great way to protect their own time. So,
Correct.
yeah, the CE classes are a great way for agents to sharpen their skills, broaden their skill set, and yeah, I commend you for taking the initiative and for investing your time to just give back because you don't get paid for that, right?
No,
That's something you do pro bono.
correct. And another thing to point out is I don't consider myself to be um, an aggressive salesperson. I share my knowledge. I, inform and guide the client, and my knowledge, in a sense, is what sells me. I don't have to do a hard sell. And I think it's the same with agents. If they're knowledgeable and they're imparting that knowledge, it builds trust, and that's invaluable. It's very important to our business. Building trust and building a client base that returns to you because they trust you and they had such a good experience, that they will come back.
Yeah, I personally hate when people call me a salesperson. I don't feel like I sell anything.
Hmm.
I am just simply educating and informing someone on how to borrow money. And everybody's situation is different, right? At the end of the day, it just boils down to the numbers and the math. And there's multiple ways to structure financing. Different methods and applications benefit different people in different ways, and it's just a matter of finding that the best structure and the best pathway for each person. So again, yeah, I don't feel like we sell anything. We do
Correct.
build and maintain relationships in that regard, right? So every salesperson, obviously, every good salesperson does that, but I think it's because we care about the clients too,
Hmm.
right? And obviously, running a referral based business, which is another stage that you get to in this industry where you're not
Right.
relying on leads, which is where we are, requires that. So, that's a great segue too into the market and interest rates. Lori, I know a lot of, well, most people, when they think about mortgages, they just immediately turn to the internet, like we all do for just about everything these days, right? Um, Talk to me a little bit about interest rates, specifically how they appear on the internet, and how that can be confusing for a client. And really, where you guide people to follow along with the market and how to get the best information out there, because it can be extremely confusing, and in many ways deceptive, for the consumer, in my opinion. So yeah, touch on that for us, with respect to rates and the internet.
Yeah. So for starters, not obviously everyone is not getting the same interest rate. Okay, for many reasons. I don't know if we have time to get into LLPAs, but not everyone is getting the same interest rate. However, every single person that Googles what are the rates and end up, you know, on a site that's just going to show one interest rate based on a certain credit score. Hey, if you have a 740 credit score, you're putting 20% down, it's a single family, here's the rate. And there's
Right.
also
Everybody
going to,
sees the same thing. You're saying,
everybody
right? We
sees it.
all,
And
yeah.
then there's teaser rates, which we all know, certain sites that are advertising certain banks are going to have, unusually low rates advertised. And when you look a little further and read the fine print, um, you're going to see that that rate is going to come with points and fees. So it is really important to talk to a professional loan originator that is going to explain why your rate is the rate you're getting, um, and how to determine, you know, what your rate is going to be, as opposed to just looking online and seeing a teaser rate. So that's really important. And one
And
of
I
the
think
things we
that that's
teach.
part of why it's so deceptive, right? Oh, sorry. Go ahead.
No, I was going to say that's one of the things
No,
that
go
we
ahead, Lori.
teach to the realtors to impart to. One of the things that we teach to the realtors to impart to the clients is to beware of what you see online. If you're looking online, you're not getting the whole picture. You really need to talk to someone who's going to educate you on where the interest rates are and what your particular rate is and why. That is very
Yeah,
important.
that's a really good point, right? That you bring up. Like, if you're going to create an advertisement for something for an interest rate, you can only advertise one interest rate. And
Mhm.
there are so many factors that go into determining what someone's interest rate is. And again, the consumer just doesn't know that, right? So, from an advertising standpoint, what's going to be a better advertisement? A 5.5% interest rate or a 6.5% interest rate, right? Which one's going to get more clicks? And
Yep.
for that reason alone, I think interest rate advertising should really be illegal and banned. It's super confusing. Every interest rate that's advertised on your big sites like Bankrate, the headline interest rates are always the lowest. They always assume a $500,000 mortgage balance, a perfect credit score, a big down payment. Those are going to drive the lowest rates and the lowest cost of rates. And then they're slapping points and fees in there as well, which you
Yep.
mentioned in the fine print, which oftentimes is a very poor investment, and a poor decision, but it gets people to click, right?
Yep.
So, again, there's so much deception and confusion out there for the consumer. You have to be careful. You have to educate yourself. And, talking to a professional mortgage planner, mortgage loan originator is extremely valuable. It's something that AI is never going to replace. And hopefully one day they do ban interest rate advertising. Because it's just it's unfortunate in my opinion.
And it's lazy too,
But
in a sense. It's
it
lazy.
is
So
lazy. Yeah,
anyone can
yeah,
just quote a rate. A call center can quote a rate, but are they really explaining why your rate is your rate and the difference between paying a point versus not paying a point, explaining all the fees that are involved? So that takes some extra knowledge and effort that, a good loan officer is going to do with their client to educate them to make the best decision.
yeah. I think people have no idea, that interest rates really don't even move. It's what they cost that moves. And everybody has a different cost structure, right? Someone with a 800 FICO score can get any interest rate for a lower cost than someone with a 600 FICO score, and that's what makes it impossible to advertise. And just for that reason alone, I think it's again extremely important that you talk to someone and you get educated on how interest rates work, what's going into those numbers. And the other question that I think people fail to ask all the time is, not what rate am I going to get, but what am I going to pay for that rate, right? What's that interest rate going to cost me in fees and points, which points are just interest paid up front, prepaid interest in return for a lower rate over time. Everybody's cost is different, right? So, it's easy to go on to a big internet lending site, generate yourself a pre-approval and pick your own rate. But are you paying attention to the fees, right? Because they don't really highlight the fee structure. And that's where people, when they do see what they're actually paying for some of these lower rates, they have that aha moment. They do the math and they're like, wait a second, is it really worth paying $10,000 to save $100 a month? Right.
And the other thing you
And
mentioned
again,
was the pre-approval. If you're getting a pre-approval online and you haven't provided all your documentation and it hasn't been reviewed, you could be setting yourself up for failure and lose money in the process. So that's the other landmine, that if you're just simply going online to get your mortgage without actually speaking to a loan officer and making sure that they're vetting out your income, assets, and credit, that's huge,
That's
both to the
massive.
client and to the client and to the referral source. Because, we don't want to waste the client's time or money.
No, you hit on a really good point. The word pre-approval gets thrown around so loosely in our industry.
Mhm.
Most of those sites are, well, all of those sites are offering really a pre-qualification, which I like to describe as a scratch of the surface. Whereas a true pre-approval, is looking under every stone. It's actually making a commitment to lend someone money. It's making a credit decision on someone's ability to borrow money and actually get the mortgage in advance of signing a contract to buy a house or refinancing, right? It's a true pre-approval, but that requires underwriting. That requires providing all the documentation and all the third-party verifications, and those activities, have a cost to the lender to do. So most lenders and the lending industry in general just created the pre-qualification process to streamline that and make it less expensive for us to give someone an initial idea on whether they can borrow money. But at the end of the day, it's not a credit decision, and finding a lender that will invest in the actual pre-approval process is invaluable. And just even understanding the difference between a pre-qualification and a pre-approval, most people don't have that knowledge. Most real estate agents don't have that knowledge. So, it's a great point that you brought up. Absolutely.
Mhm.
And then Lori, give me your outlook on interest rates. Right, we're here at the end of 2025. I can't believe a whole nother year has ticked by,
Mhm.
another trip around the sun. And we're about to head into a new year. Interest rates have been elevated, now 3 years post COVID. They've been, averaging around 7%. We've had a couple trips down to 6. We haven't been able to get below that. I think we've only actually got there once, maybe twice in the past 3 years. So where are we going from here? What's the outlook for 2026 on interest rates, and how do you feel about the market?
Mhm. Well, I do think if I had the answers, I'd be a billionaire. But I mean, historically, the rates have averaged around 7%. So do I think we're going to see rates in the threes and twos? No, I don't believe that. Um, and I think if you're waiting for the rates to drop to buy, I think that's a mistake. Um, just because I think, home ownership, I really do think it's the best way to build wealth, to build generational wealth. And waiting to see if the rates come down when you could have been building equity, I think waiting for the rates to come down in that sense is a mistake.
Yeah, that's a great point. Buying a home is an investment, right? Um, and not only is there a tax advantage to home ownership, right, when you're paying interest and property taxes, but you're also realizing appreciation over time. We had some crazy years there where appreciation was, double digits, even over 20% for a couple of years there. That's not typical, right? I think the average rate of appreciation over the past, 60 years is about 4%. But you do miss out on the appreciation over time if you wait, right? So there's a cost to waiting. Um, and to your point, I think, people forget that prior to 2008 and the financial crisis, right, really about 2010, if you look back to the early 90s, interest rates have been between 7 8% on 30-year mortgages. Prior to that, in the 80s and before that, there was hyperinflation, and we saw 16, 17, 18% mortgage rates. But things calmed down, and then through the 90s and early 2000s, really leading up to that financial crisis, rates were around 7%. Then when the financial crisis happened, the government intervened in markets and forced interest rates lower artificially to rekindle the economy, right, and provide relief for the consumer, but that was atypical, and they did that for many years. I don't think people realize how long they stayed meddling in the markets. It was starting to come to an end in 2018. And markets settled. Rates were still very low, 3, 4%. But then shortly after, we got sucker punched with the pandemic. And that caused the government to have to re-intervene again, even at a greater pace and, more heavily than they had prior. And it drove interest rates even lower. We had people buying homes with 2% mortgage rates. At one point, I think we even had a few clients get in the ones, which is crazy, right? But after 2021 ended, and the government exited the market, it was amazing to watch how fast interest rates climbed right back to that 6 to 8% range, right? I think they hit a peak of 8.25%, and then they settled again right around 7%. So like if you took that period of time out from 2010 to 2022, that 12-year period, which is a long, long period of time, rates are right where they were before and probably arguably where they should be today, around 6 to 7% on a 30-year mortgage,
Yeah,
which
but
is
I
also
think,
affordable, right?
yeah, the bigger question really for me is, affordability of the house is not the interest rates. So, you know, the prices, housing prices keep increasing, you know, um, and I think this is really the bigger issue that buyers are facing now, is affordability. It's a barrier to homeownership right now.
Yeah, we tell people all the time, you don't write your interest rate on your check, you write the payment, right? And home values, have increased consistently and steadily. There doesn't seem to be any end in sight to that. I don't foresee home values depreciating or dropping. Um, Also, inventory is still an issue, especially here in New Jersey, right? There's over 11 million people in the state. There's no more land to really build on, or not much. And home values are rising. So yeah, that is an issue. And it is impacting a lot of first-time buyers, move-up buyers, right? What do you see as far as affordability? Is it a crisis? And what's being done to address it in the mortgage space? Talk about some of the tools that we have and where you see that playing out.
So I do think affordability is a crisis, especially for the younger generation coming up, first time home buyers. It is an issue. I mean, there are programs out there. One of my favorites is Home Ready, Home Possible, which is a conventional first time home buyer program where you can put 3%, as little as 3% down. And what I love about it is there's no catches. You don't have to pay anything back. It's not an adjustable rate. Um, it is a great resource, and also um, it does eliminate the loan level price adjusters for credit score, which is something um, where if someone doesn't have perfect credit, the price adjusters can make the rate very high. But with Home Ready, Home Possible, it does, if you qualify, um, it does eliminate those price adjusters for interest rate, which is huge for a first time home
Yeah, and
buyer.
that goes back to what we were talking about before, where everybody doesn't get the same rate, right?
Correct.
So it's those adjusters that increase the cost of the rate for people with lower credit scores or less of a down payment. So those programs just do away with that, right? They kind of level the playing field and make the
Exactly.
financing more affordable from a cost perspective and an interest rate perspective, and let people, have a shot at getting into a home for the first time. Those programs are great. They also reduce the private mortgage insurance, right? Or the PMI. Yeah. So overall, just driving a lower housing payment especially for a first time buyer. That's fantastic. And then, there's also programs through the state and the county, which are available, right? There's down payment assistance programs that are out there to help people qualify for mortgages. We have a access to a grant program, right? Which we can use with an FHA loan. Which touch on that, Lori. Like, what the minimum down payment for an FHA loan is 3.5%. Talk about how the grant helps with that.
So, well, firstly, an FHA loan is a great mortgage for first-time home buyers. They allow for lower credit scores, higher debt to income ratios. Um, so oftentimes it is the loan of choice for a lot of first time home buyers. So when you compare it with a grant, so the minimum down payment is 3.5%. So if you compare it with a grant that will cover the down payment, um, it is possible for the homeowner, for the home buyer to purchase a home with little to no money. So, one of the things we also used to see a lot, which is just starting to come back, is seller paid closing costs. So, when I first started, a home buyer would almost always, if they were a first time home buyer, they would ask the seller to pay their closing costs. Okay. How did we do that? So if the purchase price was 300,000 and you wanted the seller to pay 10,000 towards your closing costs, you'd make the price 310 and the seller paid your closing costs. So, but as the, supply and demand got tighter, now you have less houses for sale, more home buyers. So a seller may have his choice of three, four, five, six offers. They're not going to choose the offer where they're asking to pay closing costs, right? So it kind of fell
Yeah,
out of
seller's
fashion
market.
in a sense. Correct. So in a seller's market, we stopped seeing the buyer asking for seller paid closing costs. But now that the market is kind of softening, um, especially in certain areas, I'm starting to see buyers ask for closing cost credits again. So this is a great tool for first-time home buyers because again, we know that down payment and closing costs is typically the biggest barrier to homeownership. So,
Sure.
between the
Yeah.
grants, the low down payment programs, seller paid closing costs, these are all tools that we can use to help the client get into a house.
Yeah. And, again, if interest rates do move a leg lower in 2026, that's just going to also help
Hmm.
address the affordability issues, right? And help more people get into a home, which will bring more buyers, obviously, off the sidelines into the buyer pool, which also increases competition, which is one of the reasons why I think that home values will stay steady. But those home values, as long as they're staying steady and increasing, also support the ability to utilize those seller credits that you were just talking about, right? So, um, I think overall, the outlook looks good for 2026 for interest rates in the housing market. Obviously, Fannie Mae, Freddie Mac, the government agencies that oversee the mortgage industry in this country are predicting interest rates to fall towards the mid fives. Right now, they're in the low to mid sixes, all right, today, but they've also been as high as 8%, all right, in the past couple of years.
Right.
So they do move
Yep.
around. Average has been about 7%. Hopefully that average starts to move lower again. But, to your point in the very beginning, I don't think we're ever going to get back to the 3% mortgage rates, at least not anytime soon, that we saw from 2010 to 2022 because of the financial crisis and the pandemic, unless, of course, there's some other financial crisis, that would require the government to step in again. But barring that, look, 30-year fixed rate mortgages anywhere between 5 to 7% are affordable. And, with these tools that you talked about, I believe a lot of buyers will be able to take advantage of the market. So, yeah, excited to see where we go in 2026. And I do also want to be mindful of time, Lori. Thank you. We're coming up on the hour, so I thank you for. It does, yeah. It always goes by quick. I love talking to you. Having a
We can
conversation with
we
you
can
is
keep
great.
talking about mortgages.
Yeah, well, we could talk for hours and hours. But yeah, so we'll put together some information for the listeners. We'll share some links to the CE classes that we talked about. And in 2026, we're going to be doing some in-person events at our office in Manahawkin, ongoing CE classes. We're also going to do just educational, informational seminars for the public as well. So if
Hmm.
anybody has an interest in learning about interest rates or learning about buying a home or refinancing, we're going to make those resources available to the public. Lori, you'll be a big part of teaching those classes. So I look forward to doing that with you.
Yes, I'm
Um,
excited. Let's go.
yeah, absolutely. Yeah, it's gonna be a great year. So, with that though, we will wrap it up. And again, thanks again, Lori, and to our listeners, thanks for tuning in. Until next time, stay informed, stay connected, and keep originating. We'll see you
Thank
soon.
you, Chris.
All right, Lori, have a great.
Bye.